Sunday 9th of March. So we'll be doing a weekly analysis for the week ahead. So I'll be walking you guys through what my expectations are for the week going into the week. So here's the economic calendar we have here. We have Monday 10th of March, which is Monday 10th of March. We have no news event in the market. So that day was normally this is the main reason why I usually don't trade on Monday. So on Tuesday we have news at 10, just job opening. Wednesday we have red food and 8:30. So CPI week actually. So I'm just opening the chat now. So we have CPI for the week. Our PPI on Thursday. We have Friday. We have we have high impact news on Friday. So I just want to see high impact news. So that's not my problem. Whatever event is going on that day, I just need volatility in the market. Volatility is what I need. Let me walk you guys straight to the chart and do an analysis on DXY. So on DXY, whatever analysis you have on DXY, also will be doing the opposite on foreign currencies, which is cable and fiber. So here is the weekly time frame on DXY. I would have started this analysis on the monthly time frame, but I decided since we are looking into the next week, I think it's better we just start the analysis on the weekly time frame. So if you see, we really overextended this week. So it looked like a big move on lower time frame, but it's just a displacement. This is what I just observed the market display. So we are breaking below this low and few pips to take out this low. So there's every possibility for price to take out this low. Let me zoom out a little. For price to take out this low. Price takes out this low. We are very close to that low. If you look at we are very close to this low. So price breaks below this low, we are expecting a push back into this range. So let me add the leak tick on it. Okay. So big chart. Markups. So this is looking like a clean low. This low are relatively equal. So since we have this displacement, initially I was having anticipation of price trading around this fair value gap and trade above. But since we are coming from an inefficiency from above, like this is another block, and an inefficiency, like we have an inefficiency here, so price traded to that area. If you see how it touched this fair value gap, the monthly fair value gap price traded into, then rejected. So the main reason why I believe we will keep going down for it. Next week I expect us to still be bearish. So if we continue being bearish for next week, what are my reasons for and areas of interest where I want to see price to? But one thing that surprised me when the market opened this last week for the month of March, we opened and started running to the downside. The market opened on March, started running to the downside. We didn't even trade back to the opening price of March. Look at that's the devil's mark right there. Price never came back to this area. So just like that, the price keep going down. So that was the reason why I never took any trade on the foreign currency. So I was expecting price to trade back to the opening price or trade to the 50% of the range, but it just keep pumping down. So I assume it's a displacement here on the higher time frame. So since we have broke this low, close below it, trade below this fair value gap, close below the fair value gap. So I'm anticipating price to come back in around this area. So from this high to the low of this candle, this is 50% here. So we are paying attention to this area. This this inefficiency here, this fair value gap here, is an area I want to be paying attention to. So if price trade into this place, it gives us reason to keep going down. I'll sell all to the way to this place. This level here is let's mark it up with our feed. You can see I'm not confusing some people. You understand? So that level there is 50%. Let me remove this here so that I don't confuse us. So there's 4 levels here. 4 levels here. So I want to now bring out the numbers so you understand what I'm saying. The 175, 50% and 0.25. So this 0.25 looks like an area, and if you look at it, it's aligning with an old high with the fair value gap that has a smooth low, a smooth bottom. That's what we call it, bottom. So it has a very smooth low to the downside here, so I'm expecting price to trade into this area at least 0.25. Price to trade into this 0.25 as my draw liquidity. So this is my short-term draw liquidity on the higher time frame. So let's go down to the daily time frame and see what is out there. So my levels are still there. So if you look at this price action here, you see we are having a market maker sell model playing out here. We traded into a PDRA on the higher time frame here. Price traded below this. This high here is the previous month 3 months high. So it's like a candles range theory. If you understand, if you trade candles range theory, you understand what I say. You understand what I mean? This is the previous 3 months high, and previous month's low. So this is from this high to this low. That's where we have this level here. This is my draw liquidity. So this inefficiency price traded here, I'm expecting price to come back to it and trade lower. So this will be a turtle soup. Price has dropped liquidity above these 2 levels, trade below. So we're looking for price to come into this inefficiency here, this one or this one. If we trade into this place, this 1.5172, I will sell at like so I will sell. That's a good area to sell. So sell off. You look for any PDRA that you can anchor your stop loss at, then you ride all the way to this side. So this is my analysis on DXY. I don't want to start going into other foreign currency, Euro USD and GBP USD or Nasdaq. So, but since this is what my expectations are, I'll be looking for the reverse. I'm looking for the opposite direction for price to go to and GBP USD is already looking nice. Let me just show you guys. So look at this. We have this level here. This is a fair value gap on the weekly, I guess. So I think I'll trade GBP USD this week. Look at this. So the next week there will be opening. I expect price to at least trade back into the high of this fair value gap and continue going for this high. The swing high here. This swing high here. This is where we'll be expecting price to go. This is my next drawn liquidity, followed by this inefficiency here. put my draw and liquidity at the inefficiency bar, I can put it here. I can make enough from this place. How many people can I get? Pips. How many people can I make from this side? There's about 220 pips movement to the upside. So you can capitalize greatly from it and capitalize very well from it if you know what you're doing. But you still have to keep in mind that you haven't traded to the opening price of the month. But this is my expectation for foreign currency. So even where you is expecting bullish, it's expected to be bullish as well. So that's it. So I'll go to the daily time frame. We have this is a level I thought price would go into and displace to the downside or continue doing that, but it got to that level, traded above it, gave us a nice inefficiency here. Look at it broke, price went 2 and through it, like ICT will say, 2 and through it. So we traded 2 and through this level and expecting price to come back down here for us to look for a continuation to this buy side liquidity here. So that is my analysis for the week. I'm gonna hit them be doing already. So that's it, guys. I'll catch you on the next video. The next video, I don't know what I'll be uploading next video, my next video, but anyhow, I'll update you guys. Peace out.